evening and a very warm welcome to The Big Question here on NDTV Profit. I'm Vikram Oza and we are coming to you live from our studios in Delhi. It is the big thaw that the world did not see coming, but one that could reshape global trade equations after all that strife over tariffs, tech wars, tit-for-tat sanctions. Today, Donald Trump and Xi Jinping have not only met in Busan in South Korea, they've hit that reset button on one of the most fractious relationships in modern trade history. So what followed is a breakthrough. A breakthrough has happened in Kuala Lumpur, where trade negotiators from both sides, they've agreed to a joint arrangement that eases some of the biggest flashpoints between the world's two largest economies. So on the sidelines of that APEC summit in Korea, the two leaders have met and the U.S. has decided to really go ahead and pull back on those tariffs on Chinese imports. They were 57%, they're bringing it down to around 47%, and pause also their Section 301 investigations into China's maritime and shipbuilding industries. And what is Beijing going to do? They're going to suspend their own retaliatory measures and also suspend the export controls on rare earth minerals. They're going to do it for a year, but it is a step that could ease supply chain pressures for global industries, everything from semiconductors to EVs. So both sides have reached new understandings on fentanyl control, on agricultural trade, on investments, even TikTok's regulatory future. So Washington and Beijing, they're signaling a return to dialogue. They don't want to go out with that decoupling anymore. Which brings us to a crucial question. What does this thaw really mean? The thaw between the US and China, what does it mean for India? For months, India has been seen as this beneficiary of the China plus one strategy. A trusted alternative, really, in a world that is wary of over-reliance on Chinese manufacturing. So now, where we see trade tensions easing between the US and China, the question is, does that shrink India's advantage or does it open new avenues for cooperation, for investment? And could a calmer global trade climate bring down input costs, stabilize commodities, help Indian exporters ride the next wave of global growth? Or will peace between Washington and Beijing mean less urgency for companies to diversify to India? So we have all these questions. The big question that we're asking this evening, while Donald Trump and Xi Jinping are patching up their past differences, is India turning the peace on the trade front of the world's two largest economies into its own advantage, into its own profit? And to start things off, let's just get a sense of the optimism around the meeting that Trump had with Xi Jinping. This is what he has been heard saying. He's even rating the kind of meeting he's had with Xi Jinping, and he's rated it out of 10. Here it is.
There's no roadblock at all on rare earth. That will hopefully disappear from our vocabulary for a little while. It's a one-year deal. That will, I think, be very routinely extended as time goes by. Ukraine came up very strongly. We talked about it for a long time, and we're both going to work together to see if we can get something done. We agree that the sides are, locked in, fighting, and sometimes you have to let them fight, I guess. Crazy. But he's going to help us, and we're going to work together on Ukraine. But overall, I guess on the scale of from 0 to 10, with 10 being the best, I would say the meeting was a 12.
So a 12 out of 10, that's how Donald Trump has described that meeting with Xi Jinping. Clearly, the optics are rather warm, but what does this newfound bonhomie, what does it mean for the global economy? And more importantly, what does it mean for India? Let's discuss this with our panelists. David Roche is joining us, strategist at Quantum Strategy. Jayant Krishna also with us. He's senior fellow at CSIS, the Center for Strategic and International Studies, along with Jayant Das Gupta, the former Indian ambassador to WTO, the World Trade Organization. And for the Economist perspective, we have Mithali Nikore with us, founder of Nikore Associates. Welcome all. Good evening to all of you. And David Roche, the first question to you. 9 months into his second presidency, now Donald Trump has achieved what few were expecting, a thaw actually with China, with Xi Jinping. Tariffs are down, trade talks are back, and rare earth restrictions are off the table, at least as of now. Is this a turning point, you think, in global trade dynamics? Or do you think it's a tactical truce as of now?
I think it's a tactical truce. I'm very sorry to pour cold water on all the mood music, but I find it tough at my age to dance to mood music. Yeah, I don't see any of the really fundamental issues between China and the US as having been resolved. The US wants to contain China and prevent it getting its global standing where it thinks it ought to be. And China wants to replace the US's global world order and achieve strategic autonomy. And I think those things are untouched as goals. What we've seen here is that there is a truce, and that truce will take tariffs, which the US imposed on China, down by approximately 10 percentage points. So you might go from 55 to 45, still a huge rate of tariffs. And I think it is most important to realize that China has not taken the noose from around the neck of the US in terms of rare earths. What China has done is to slacken it off a bit for a year, but China remains in strategic control of its rare earths. It's just put draconian controls on the production so that it becomes very much under the thumb of Beijing, and it can reenact those control limitations on exports to the US at the drop of a hat. So I would say enjoy it while you can. But if you ask me what I think it means for India, I think it creates an opportunity for India to give US very little on the agricultural front, but for the US to ratchet down its kind of Russian oil imposed tariffs, because Trump is obviously looking to escape from the damage he has done by marching us all up the hill on tariffs and then marching us a little bit down the hill. Actually, all this was a vain exercise, futile and wasteful. But I think the good thing for India is that these tariffs will now be taken off virtually, and that India will be able to step into the middle of a new so-called relationship with the United States, with the tariffs gone and standing quite tall beside China. So in India's terms, it's pretty good.
Yeah. Well, we'll have to see whether this is an opportunity that India can actually dive into. But you're not very optimistic that this is something that is going to really change global trade dynamics. Jan Krishna, would you agree with what David Roche is saying? Because he's saying that, yes, Trump has taken us up the hill and a very difficult position that he's left us in. And now he's trying to retract, but it might be a temporary retraction. But in the meantime, India was seen benefiting at least from the years of U.S. China rivalry, with that China plus one strategy driving global investors to look at Indian manufacturing. Now that we are at least optically seeing Washington and Beijing talking again, trying to strike a deal, is India's investment appeal at risk of cooling off, you think, if this actually takes the shape of a deal that could be longer lasting than what David Roche is suggesting here?
So Vikram, I tend to agree with what David said. This is a temporary truce. This is not a long-term trade deal at all. It's only for 1 year. And if at all it shows anything, it shows that the two countries have not been able to resolve major differences that they have over tariff and trade issues, including non-tariff barriers. And, if you look at all it has is a, 10% cut in the fentanyl tariff, and the overall tariff going down from 57 to 47% only, right? And China has agreed to buy U.S. soybean, pharma products, and so on and so forth. But more importantly, China has agreed to put on hold the bar it had put on export of rare earths and magnets to all over the world, right? And U.S. will also suspend expansion of export controls on foreign firms listed on the entity list. I think it's even a full-fledged deal is quite far. At the end of the year it will be renewed. And one more thing which US has been able to make China agree to, they said that China will start negotiations on purchasing oil from the US, right? So I think it is a reflection of the fact that they have not been able to resolve big ticket items under the trade deal, which has been in negotiations from February 2025 onwards. But I fundamentally believe I don't think in any way this will make India's case of a trade deal with the US any worse. If at all, it would improve because at the end of the day, President Trump has opened so many arenas all over the world. So many issues he has opened, tariff, non-tariff, every walk of life, there are issues, be it on climate, be it the conflicts happening. So I think he's also under pressure to close some of these open issues. And especially, see, let's understand vis-a-vis China, these are the world's two largest economy. Then if you go by purchasing power parity, then Chinese economy is ahead of the US already, if you go by PPP. They have a trade, US has a trade deficit in favor of China to a goods deficit itself is of the order of about $300 billion, right? So I think none of these issues are sorted at all. It's only a temporary arrangement, a working arrangement they have put forward. And if you really ask me, even at the 47% level, it's not easy to do trade. In trade deals between two countries, it is rarely you have these kind of margins to play with that, such a significant, it's better than what it used to be, but still a far cry, for all the doors to be opened for Chinese exports to the US, right? And India, I fundamentally believe, I think eventually it will depend that where it ends, where at what level, the Indian tariffs are negotiated, which are currently at 50%, assuming that 25% would go because India has already started reducing, import of crude oil from Russia after US has blacklisted and put sanctions against two of their major crude oil companies, right? So after that, so from 25, assuming that the 25 goes, then remaining 25 goes to what level? I think that there would lie the beauty of our negotiation process, going forward, Vikram.
Let me take that across. The negotiation process is going to be an important one, like David Roche started out by saying as well. In terms of a tactical truce that may be for the short term, it still gives us, as the negotiators from the Indian side, that much more leverage when you talk about this short-term truce. Jayant Dasgupta, would you agree, especially when it comes to rare earths and when it comes to the import of Russian oil? On these two counts, do you see any dynamic change taking place in the way India now has those negotiations with the US?
I think the first thing which comes to mind is that President Trump has blinked. He was the first one to blink. The Chinese kept on saying that it has to be negotiated. And this kind of threat and use of extreme language will not serve any purpose. And they have been proved right. What was, I think, particularly galling for President Trump and the US administration is that they have not been able to bring China down to its knees. And China already had these two strategic weapons. One, the rare earth magnets, and two, soybean and a host of other agricultural products on which they buy a lot from the US. And they could have easily, twisted the knife even more into the wound. So that is one. As far as India is concerned, I think apart from China, India is perhaps the only country, and Brazil to a certain extent, which have not succumbed to the US pressure tactics. So this will augur well for the remaining part of the negotiations. And I think one of the points which have to be noted is that, if it had all been that easy, we would already have had an agreement because by fall, which means by October end or November, the target had been set for the first tranche of the trade deal. So since we have not reached that point, obviously there are still quite a few issues which need to be resolved. And primary amongst them would be GM soya, corn, dairy products, and of course Russian oil. So I think in the case of China also, there is nothing which has been said about not buying Russian oil. It is only about buying more US oil, and which India is willy-nilly doing already. Going to buy, and it has already, in the first 8 months, bought more US oil than ever before.
Right. So the material impact that this could make on the economy, Mithali Nikore, what do you think? Because when you're talking about these optics, though it might be a tactical truce from the Trump administration, and he has a lot of steps that he might have to retract from because he's opened up battlefronts on several counts, Now, when it comes to a trade deal with India that could have economic ramifications, on the Indian side, if you can assess that for us, when it comes to oil and the kind of imports, when it comes to protecting our agricultural sector as well, which has a huge bearing on how inflation pans out for the country. And already we're talking about China and the US with soya beans, etc. There is that entire process. And of course, when you talk about seafood, etc., it's one of the largest exports that India does to the US. So there is a lot at stake. When you take away what is being talked about between the US and China as part of this understanding so far, not a trade deal, still there, I mean, like Mr. Dasgupta is pointing out, if it was as easy, then we would have already got a trade deal. But India is in the throes of negotiations with the US. What do you think will have the chief bearing on the negotiations now when it comes to all the factors that we have to consider to protect our own interests strategically with the US?
So thanks a lot, Vikram, for bringing me into the conversation. And, you know, this is exactly what we have been discussing actually for the last few months, right? That the way the Chinese have sort of negotiated this entire dynamic and the kind of relationship that they've established with the US is one clearly that of equals. It has been very clearly established that, you know, with the fact that China controls nearly 70% of the global supply chain around rare earth minerals, and the fact that electric vehicles, the fact that smartphones, the fact that everyday equipment and electronics that we use are actually so dependent on these rare earth minerals, it becomes very critical, to cooperate with China, to have that relationship with China for any country. And also with the advances that we see in artificial intelligence, the fact that China is so far ahead in this, global AI race, and the fact that rare earth minerals actually have a very huge role to play, even in, the making of AI chips, again makes it very critical, for any country in the world to really negotiate and have a very good relationship with China. I mean, the US now realizes that it cannot go it alone. It has to work with the Chinese. At the same time, even the Chinese have realized that they have to work with the US. Now, what does this show us from a global macro trade picture? The first point is that this is what I am heralding as the moment in which global trade comes back to a rules-based order. The kind of order that we saw when the World Trade Organization was much stronger, but we still see countries coming back and saying, yes, we want to trade together in this rules-based order. What does that mean for a country like India? What it means for us is, of course, it opens up opportunities to trade with both the US and the Chinese, as well as with other countries. It opens up the opportunity for us as well as for other countries to continue to diversify. Because while we know that today this thaw in relationships is taking place, all countries realize the importance of diversification now. So it's not just about having a China plus one manufacturing strategy, but rather to say that, it's not only about China plus one, but China plus 10. And we have to ourselves also, as Indians say, US plus one, plus two, plus three. So we have to start working in a multipolar environment. And it sets us up for a much easier time in this multipolar environment where we can attract investment from the Chinese, we can attract investment from the Americans, as well as from the Russians and other countries as well.
Correct. So you're saying this opens it up really, but from a markets perspective, David Roche, does that happen as well? You see calmer US-China relations, as short as they may be right now, typically they would boost global risk appetite, but do you think this peace dividend will translate into stronger portfolio inflows into emerging markets like India? Could that be the natural fallout that you see happening, which could benefit the Indian equities right now, where we've seen global outflows?
I think the case for India being an exceptional emerging market and being up there, standing up to the US and having achieved the same stature, not only in terms of politics, but in terms of its economy. It may be smaller, but India has done a terrific job. And I think the argument for putting money into India is based on India. Frankly, if there was no ratcheting down of tariffs from China, nothing else was happening, India would still stand out. But the question here is, what does this marginal change, and I don't think it's a return to a rules-based order for trade or anything, because I think the rivalry between China and the United States, none of the issues have been resolved. They've just been put on hold. So what is the marginal impact on India of that? Well, obviously it creates an opportunity, because if India was a pretty solid thesis for emerging market investment in the first place, then if you relax the trade between China and the United States, then it doesn't get worse for another year, then that creates opportunities for India to grow its share of international trade as well. So it's obviously a positive. And I would say one other thing, and then I'll shut up. I think the dollar is going to go on down. It may be stable at the moment, but it's going to go on down. As the dollar goes on down, I think people will be looking for someplace else to put their money. And that is a very important factor in bringing capital into emerging markets.
Right. So you see those two opportunities, perhaps India benefiting at this level. There might not be that holistic, optimistic push that Mithali is pointing out, but Jayant, Krishna, for an economy like India's, where we are driven more by domestic demand than actual exports, you think this easing of global trade tensions is going to be a hidden blessing as well, because it helps moderate commodity prices, it improves macro stability as well. Do you think overall, as short as this push might be beneficial for us?
So, Vikram, I only the current deal between China and U.S. I only see as some kind of a thawing of the global trade tensions. I don't see major solutions emanating from these discussions so far at all. So, but yes, I think it'll be a good opportunity for India. And all depends now what kind of negotiations India does with the US in the next round. Because if you look at the beauty of our negotiations would depend upon where the tariff rate settles eventually. If you look at among all the countries that matter to India from an export competitiveness point of view, UK and Japan have 10% tariff. If you look at European Union has 15% tariff. If you look at South Korea, it has 15%. If you look at Indonesia, Malaysia, they have 19%. If you look at Vietnam and Sri Lanka, it has 20%. So I think eventually it would depend how well we play our cards on the negotiation table. And look at, in today's day and age, countries do not necessarily get what they deserve. They get what they negotiate. So where our tariff eventually gets settled, obviously it can't be between 10% and 15%. It doesn't look likely, because 10 being the lowest with the UK and Japan, and European Union is 15%. So somewhere I think it will be between 15% to 20%, and how close it will be to 15%, I think would really decide, does it augur well for Indian exporters who have suffered big time since the time this 50% levy has been imposed. I think that's, and another area which is very, very crucial is the Section 232 tariffs, which are linked with the US national security.
Correct.
And where steel and aluminum take a big hit. I think if you look at in 2018, when the first time President Trump came, he had imposed 25% duty on tariff on steel and 10% on aluminum, which Biden tweaked with it. But when President Trump came to power this time in February, it was raised to 25% each for both the products, right? And then it became 50% with the additional penalty, right? So, and at that level, our steel and aluminum exports to the US or anywhere for that matter can't remain competitive at all. So I think where these percentages eventually settle would determine, that how good it is for Indian exporters to the US.
So you're looking for more pointers to be able to say in any certain fashion how this is actually going to work out. Jayant Dasgupta, we'll let you have the last word on this. Given your WTO experience, do you see this trade thaw between Trump and Xi that has taken place, high on optics, do you see it strengthening this rules-based system? That's an interesting point that Mithali brought in, because definitely David Roche doesn't see it as anything that's strengthening rules-based system. But does it deepen the trend of bilateral power deals, bypassing all these multilateral frameworks like the WTO, something that could sideline countries like India? Do you see that happening?
I agree with Mr. Roche that this just doesn't, fall into place in terms of strengthening multilateralism in any way. It is just a ceasefire, if you can say that. The Chinese were pointing a gun at the head of the U.S. and the U.S., before starting off this trade war, knew very well what to expect from the Chinese because it had happened in the first stint of President Trump as well. Soybean exports had been hit very badly, and President Trump had to dole out $28 billion to soybean farmers even on that occasion. So it was expected. When you keep doing the same things and expect a different result, I don't think it is very prudent. Anyway, the point is, I think this just goes to strengthen this bilateral, trade deals and arm twisting and asymmetry of power holding the upper hand in trade relations. So this is not going to be of much help to India, but India is standing firm. And I agree with the previous speaker that, the 25% for Russian oil purchases, that has to be rolled back completely. The second point is that, we will settle for something, perhaps, my personal feeling, closer to 15%, 16, 17% or thereabouts, because, at the moment, more than 50% of the by value of the products that we export to the US are not subject to higher tariffs. It is only about between 45 to 50% of the products. And for those, they are labor-intensive products. So if we get relief, and who are our competitors? It is Vietnam, it is Indonesia, it is Bangladesh. And there, if we get something closer to 15%, it would be worth the while.
Right. We'll have to wait and watch where exactly it settles. But what we have seen has been more or less unexpected. Yes, there was this need for Trump to course correct, as it were. But this level of Trump-Xi patch-up, the two gigantic economies choosing cooperation over confrontation, at least for now, is the big headline. The U.S. has rolled back some tariffs. China has suspended rare earth export curbs, at least for a year. Both sides are signaling a return to pragmatic trade engagement. For India, of course, the challenge and the opportunity, they lie side by side. A calmer global trade environment could bring price stability, could mean that supply chain, there could be some relief on that count, and investor confidence as well. But it could also mean sharper competition from China once again. The question, therefore, isn't just whether India can really turn peace into profit. It's whether India can use the moment of calm to strengthen its own competitive edge before the next storm. And one can expect that given the dynamics of the Trump administration. But on that note, I'd like to thank my panelists for joining us tonight. David Roche, Jayant Krishna, Jan Das Gupta, Mithali Nikore. Thank you for your sharp insights and your perspectives. And really, that's it from us on this edition of The Big Question here on NDTV Profit. The questions keep rising and the big headlines are what we are here to decode. We'll continue doing that. I'm Vikram Oza from me and the team. Thank you so much for joining us. Good evening.